You've always talked about how there's been extraordinary complacency, that markets are not pricing in the risks. With what we saw in yields overnight, is that a reflection of risks being priced in?
Yeah, so when I talk about that kind of complacency, I'm talking about the asset price in the United States, and it's a long list of things. It's, QE, it's fiscal deficits, it's global fiscal deficits, it's, potential of the trade wars, it's these huge, complex geopolitical situation, and I look at all of those probably not being properly priced into the marketplace. But we don't know what's going to happen. So, I saw last night's reaction. I don't worry about one-day move in bond markets. So,
you don't worry about one day, but when you take a look at yields, they are at higher levels than they were before Liberation Day. I mean, we talked about how 30's higher, and some are talking about 10's getting to 5, 30's getting to 7%.
Yeah.
How are you assessing that? I mean, how high do yields have to go before they reach breaking point?
Yeah, I don't know the answer to that. That we assess, the way we run the company is we prepare for a full range of outcomes, regardless of what you think. I just think there's a chance that you'll have stagflation. So I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. And the infrastructure needs are inflationary. And now you have offsets. You have oil prices down to quite a bit, which is quite deflationary. But with all those things taking place, yeah, you may be surprised. And I love to read economic history. So you can look at models. I think it's also very important to look what happened in 72 and 74 and 80 and 82 and 1990. Surprises happen, and most economists and most models don't pick those inflection points. And those inflection points are often driven by geopolitical complexity, things you don't necessarily know. And we had the oil crisis in 74. So we just want to be prepared for everything, so we can continue to serve our clients through thick or thin.
You talk about how concerned you are about debt, and of course, add to that tax bill that's being voted tonight, they say. That's going to make it a lot worse. Your take on that? Yeah, well, the United States is running the largest trade deficit that we've ever had in peacetime, almost 7% of GDP. And how the tax bill gets done, they'll probably add a little bit to that. I still think it's better that we get certainty around tax bill. I'd rather get that done, but I do think at one point Americans are going to attack its deficit problem. So do a lot of Republicans think that, so do a lot of Democrats think that. And that attack isn't just raising taxes, it's having proper policies around incentives and growing business. And I just got back from Europe last week, and everyone there is talking about growing the economies, getting more investment, reducing the regulatory environment that slows down growth, keeping everything safe for food, water, banks, et cetera. But I think governments have to do a better job at that. And so pro-growth, pro-business is a very good thing, and hopefully that can offset some of the extra spending one day. As we said, it is a higher yield environment, and you have said before that we could see some sort of rebellion in markets around the world. Is that still a possibility? How might that look like? Yeah,
so I would not call it a high yield environment. I mean, if you look at economic history, rates have been far higher than this, and they surprise people over time. And like I said, I think a lot of the longer term trends have inflationary attributes to them. And so the other thing for your person on TV, credit spreads are low. So you can have two things go against you, which is credit spreads gap out and rates are going up. And so we'll see how it plays out. So I don't want to guess how it plays out. I'm on the cautious side. I'm a little skeptical that we're going to have kind of just an ongoing soft landing here.
Let's turn our attention to China, where we are. Yeah. Is it still a priority market? Because even as your rivals de-risked from China, pulled back, you actually boosted your resources here. How are you looking at China in the next 12, 24 months?
Yeah, so we invest for the long run. So I don't look at, we're not buying and selling the stock when you say invest the next 12 or 4 months. And look at this conference. We have, when I first, it's 21 years. The first one, we had a couple hundred people here. Now we've got almost 3,000 people here. I think 1,300 companies, investors from 33 countries. We do research now, I think, on 400 Chinese companies. We're a long-term investor here. Yes, there's all these other issues cause consternation, but we have to deal with the world that we have, not the world we want, and we'll continue to grow. We cover, I think the number is 1,700 multinationals around the world in China. And these are, clients of ours from Latin America, from Europe, et cetera. And we take a lot of Chinese companies around the world. We have Mandarin-speaking folks in Brazil who speak Portuguese and Mandarin so that we can facilitate commerce between Brazil and China. So long-term investors concerned about, the current environment. But I think hopefully it will all sort out, but we're not going to pull back. I mean, I gathered the story that came out there. Somehow we're cutting back in China. That's completely false. But we understand we're going to have some political pressure until all these things are resolved.
So you're looking at China as one of the priority markets to invest in the next 12 months, perhaps. Is there consensus within the leadership that this is the place to be? You talk about taking a longer-term view.
Yeah. The consensus is that companies are going to be doing business here. There are going to be some adjustments because of the trade negotiations. But I don't think the American government wants to leave China. And we just had our Secretary of Treasury meet with the authorities here, and they're talking about having a good relationship. I'm glad that they engaged, talking about what we can do and improve things. I hope they have a second round and a third round or a fourth round, and I'm hopeful they'll end up in a good place. And
in terms of China's
but if you look at China, I mean, they go way back. They've done an enormous job over the last 20 years lifting up their people. That doesn't mean I personally agree with everything they did. I'm a full-throated, red-blooded American patriot, capitalist, but I understand that they're doing what they can to lift up their country. And here, I've seen their cars and their AI and they've done a pretty good job, and we should look at America and say, okay, we're going to have to compete too. And so I'll leave foreign policy to the experts in the government. So.
Companies get caught up in the crosshairs of the U.S.-China trade tensions. I think JPMorgan got caught up in the CATL listing in Hong Kong. You maintained your position. Yeah. Why?
Because, first of all, a foreign policy is set by the government. It's not set by JPMorgan. And the government did not sanction CATL. There are people who didn't want us to do it for a bunch of reasons, and they may have somewhat legitimate reasons, but I think the government should decide what to do, so we aren't going to do that. If they had told us we couldn't, I would salute and move on. I would have no choice. And so there are legitimate issues around national security. So if you went through all those issues, yeah, I understand that. We don't think it really applied to this particular thing. We and other investment banks did a lot of due diligence around all the issues that people raised, and I'm sure I'll be criticized about that too. But if we thought it was wrong, we wouldn't do it. So.
Do you expect more pressure?
But we're getting pressure from governments everywhere about just about everything. We're not green enough. We finance too many oil and gas companies. We get it from mayors and governors. I understand that. We try to answer them all rationally and serve our client. If there are legitimate complaints, we try to adjust ourselves, and every now and then there are, and we make an adjustment.
It is a volatile relationship, right?
Yeah.
And that volatility is expected to persist. Do you see JPMorgan and your peers continue to be pressured by the government to perhaps move away from deals or business with Chinese companies?
I got to be very careful. Both governments have export controls, import controls, investment controls. I do think those things will take place and they'll morph over time, and we'll adjust to them.
What's your strategy in Asia, bearing in mind that there's been so much pressure on the Chinese government and people are increasingly talking about diversification? How are you looking at your business in Asia?
Yeah, so we look at, every country has its own population, its own education, its own culture, its own growth, its own natural resources, a lack of them, we pretty much invest in all of them. And all these countries, we network with them, so we're banking companies here around the world. You're from Singapore, we bank Singapore in countries, and they go all around the world. So almost every one of the countries is kind of growing. And so that's how we do it. We look at each one. We don't go in and out. We don't look at investing in a country like a stock, like we think Vietnam's going to have a bad year and therefore we put. No, we look at how they're growing their population, how they're growing their companies, how they're growing their economy. And then, of course, in some cases, we simply follow clients already into those countries. So a lot of companies that we bank from America want us to be in more countries so they can consolidate more of their payment systems. And then we build those things, and we enter new countries for that reason sometimes. So my view is that's going to be going on for the rest of my life and for many years after that. And there'll be ups and downs due to trade and the economy.
I guess the premise of the question is Trump's tariffs and the trade war. Is that influencing, shaping your investment decisions and where you grow?
Not really and not directly. So like I said, I'm an American patriot, and I think there are legitimate national security issues. I think America could do a better job focusing on our own national security issues. Like, think of, we should never get all of our rare earth from one country, much less a country who might be an adversary. That was a mistake we made. It should be fixed. So there are a lot of legitimate issues that have to be dealt with, but the government is doing that. We talk to them. We just announced a Center for Geopolitics, and we help other companies look at their supply chains, their cyber resiliency, all of those things. And I think at the end of the day, it'll be okay. So even President Trump has been out there saying he likes President Xi. He wants open trade. He just wants to fix the trade he thinks is unfair. And if it's unfair, it should be fixed.
You talked about your Center for Geopolitics. Let's talk about that. What's the thinking behind it? How will it help navigate? How would it help your clients, customers navigate?
So first of all, we do it for ourselves. So you can look at JPMorgan. We've always extensively analyzed every country, every potential risk. We look at hundreds of risks to make sure we can handle. JPMorgan's got to survive just about anything, and we try to make sure we do that. This Center for Politics is both for us, but it's also to educate our clients, because we get asked, a lot of clients are asking us all the time about what should we do about this country? What should we do about this? How do you look at risk? So we just help them look at various risks they have, and so it's kind of an outgoing. I would remind people, we actually help clients in AI, cyber, geopolitical risks, governance, in addition to like raising capital and M&A and things for them, and just kind of another service we provide.
And of course, that center is in the Middle East. Is there a sense that the role of the region in the world is growing exponentially?
Which region?
Middle East.
Well, I think it's growing exponentially, and like we've been in Saudi Arabia for 80 years plus. So yeah, it has wealth, it has sophistication, and I think it's had leadership that wants to do a good job at trying to grow their economies and diversify their economies a little bit.
Is this the moment for the Middle East?
I hope so. I mean, look, the Middle East is a very complex place, and I think the terrorism is terrible. But I do think that you've seen a complete sea change in how they view. I think they want peace there. I think all the big players in the Middle East actually want peace. I'm talking about Saudi Arabia, UAE, Qatar, Egypt, and I think it would be their interest to bring real long-lasting peace, including for Israel and hopefully eventually for the Palestinian people.
Of course, we're talking about the Middle East on the back of Trump's successful trip to the region.
Yeah.
Do you think that trip marks a turning point in relations? If you take a look at the amount of deals that were...
It might. I couldn't evaluate that quite yet. I do think, if you go back to Trump 1, that I do think there was a sea change with Trump 1 and how they were looking at Saudi Arabia, et cetera. I think Saudi Arabia's changed a lot. I mean, it's dramatically different from when I first started going there. Like, women can drive cars and go to schools and don't necessarily have to wear burqas, et cetera.
Jamie, I'd be remiss not to ask you about the Fed. Given the higher yield environment, which you say it's not, but it is still higher than what it was before.
But it can go higher.
Will it go higher, and also will it force the Fed's hand?
Yes. I mean, there's always a notion that somehow the Fed is omnipotent and can do whatever it wants. And they do set short-term rates, but they also have to follow the facts. So they raised rates because inflation went up. And they can't control. Even today, trillions of dollars of these bonds are sold every day. That's done by investors around the world. They cannot control all of that. Foreigners own $35 trillion of U.S. financial tradable assets. And so, they have to react to reality, and that's not a criticism. And they say they're data dependent, but they have to wait and see exactly what happens and then do the appropriate thing.
But the thing is, their reality is different from the reality you have in mind. If you take a look at what Neil Kashkari said, he said the U.S. economy is on solid footing. And some other Fed officials have said that in terms of Fed policy, it is in a very sweet spot. So their reality is quite different.
I think, I don't agree we're in a sweet spot, okay? And I think you have to separate two things. The economy has been doing well. All the facts, we have effectively been in a soft landing. That does not tell you what the future is going to be. To worry about the future, you have to look at all the things that affect the future, kind of work your way back to the current day. And I've already mentioned huge deficits, We haven't finished quantitative tightening yet. There are huge geopolitical issues. There are these inflationary factors out there, and they have to react to all of that. So I think they're doing the right thing to kind of wait and see before they decide. And,
one final question, and I promise this is the final question.
Okay.
The dollar, right? Usually when you have a higher yield environment, the dollar gets a boost, but it's the other way around. How are you reading into dollar weakness?
Yeah, well, like I said, foreigners own $35 trillion of U.S. securities. The United States still is the most prosperous, innovative nation on the planet. That's not going to change. But I think it might be reasonable people looking at, and also asset prices are high. So if you go around the world, you look at stock prices in the U.S. are up here, PE ratios or other parts of the world are much lower. So people legitimately say, well, maybe a little bit less dollar assets and a little bit more of that. So you may see some kind of adjustment. I think at the end of the day, the important thing for America is that we do the right things to grow our own economy, and that includes affordable housing and pro-business and innovation and growth and R&D and all those things. That's the important thing. I don't worry that much about short-term fluctuations in the dollar, but I do understand that people might be reducing dollar assets today a little bit.
Coming from a patriot. Jamie Dimon, thank you so much for joining us.